Good morning, everyone. I'm Vince Lancy. It's Friday, 7:34, and this is the Gold Fix Market Rundown. Yesterday, the Financial Times put out a op-ed titled "The Gold Market is Too Important to be Left to Private Clubs." We're going to touch on that today, right after we get through the markets. 10-year yields are 4.29, unchanged. The dollar is 97.88, down 31. The S&P 500 is 64.79, up almost 11. The VIX is 1451, down 31. Gold is up 6 and change at 33.41.99, 33.42. Silver is unfortunately 37.83, down. Both of these were up last night. You're getting Asian buying, but it's not following through consistently. Copper 4.43, down 2 cents, almost 3 cents. WTI 63.48, down 47 cents. Natural gas 2.86, up 3, it looks like. Bitcoin 119 and change, up 600 and change. Ethereum 46.34, up almost 2%. Palladium 1132, down 14. Platinum 1345, down a half a buck. Gold, silver at 88, stable, and grains are mixed with wheat offered at unchanged. All right, so there's the homepage. 2 posts we sent out this morning. Top right-hand side, founders, brokers versus traders. We are in the middle of writing a book, and part of the responsibility with our editor is to get stories to him to integrate into the actual analysis to make it a little bit easier to read, war stories and what have you. And I started recording them in more detail today, and so some of the stories I'm just going to share with founders because some of them are pretty entertaining, and especially with the conversations I've had a couple of founders last couple of days. There's an audience for it. I'm not alone in this bizarre career. Anyway, the story we're going to cover today is the one that we just sent out called FT Piles on the LBMA, lower right-hand side. So let's get right to that. Numerous times over the years, we have bemoaned the continued existence of the LBMA as an institution that has outlived its purpose and merely exists to shield its members who patronize and finance it. That's our opinion. The European Central Bank has warned that extreme events could disrupt the global gold market and threatens financial security. We actually live blogged when that came out, or video blogged, whatever you would call it. And we had members on who were testing out some new technology. Oh, there it is. We covered this live on the air the day of release, giving readers and listeners the full analysis in near real time. Now, writing in the FT, Bernard Schnellman, a high-ranking executive in the industry, notes the LBMA and LPMCL, that's the clearinghouse, control key gold standards and settlement without formal regulatory authority. Structural inefficiencies, vault concentration in London, and limited accountability leave the market vulnerable. Schnellman suggests the BIS could oversee core infrastructure to strengthen governance and resilience. We have some opinions on that, and we're going to write a piece on that later on for this weekend. But we sent out the quick analysis of this and paraphrasing most of the report to everyone. It's open season on the LBMA now. The seal has been cracked. You're allowed to talk about it. The crisis is over for real now, which means they can start talking about reform. You know how it is. Maybe you don't know how it is. The industry, the LBMA, is made up of its members. The LBMA is the round table that sits in between the members. That's all it is. It's just a table. I mean, metaphorically, it's a table. It's the space that links them. And it's underregulated. It makes it's essentially self-complied or compliance. It's its own compliance department. And there are conflicts of interest. And for years, they've gone underreported or unnoticed because the gold market has been a sleepy market. And the centralization that's been in this market for such a long time has outlived its usefulness But bureaucracy being the way it is, it perpetuates itself until someone reveals the weakness or the fragility of the idea. And the someone in this case is China. And it took the Shanghai Gold Exchange, it took Chinese demand, and it took pricing power away from the West. And the LBMA is the naked swimmer as the water leaves as the tide goes out, so to speak. So there needs to be reform. Reform is the word they're going to use. They're not going to abolish it. They're going to change it. Bureaucracy's most important skill for a bureaucracy is that it remains alive, and that's what they will do. And so for Mr. Schnellman to suggest that the BIS could oversee core infrastructure to strengthen governance and resilience, it's interesting. And certainly it's logical if you're working from a government point of view, but to critique, I just say one pointed thing here. The op-ed's very good. And he talks about essentially the centralization of the industry has outlived its usefulness. Now, allow me to interject. When a market is starting out, when it's new, it helps to have a specialist or a designated market maker or someone to guarantee liquidity, someone to be the hub of the bicycle wheel. But as the product becomes self-sustaining and it doesn't need someone to make the market maker, you're supposed to open it up and decentralize it, even before we had crypto. But they never did that. So the problem is, simply put, the problem is centralization versus competition. And I'm actually quoting Arthur Levitt. Market structure is either going to be centralized or competitive. And centralization is fine when you're in the beginning. But as it grows, and what market is bigger than the gold markets? The gold market's been self-sustaining for 5,000 years, if you think about it that way. And at some point, the centralization becomes outdated training wheels, and they have to come off. And they never did. Here's my point. We need to decentralize and make it more transparent, make people more, what's the word I'm looking for? Make people more reliable, make people more, whatever the word is. But we need to make people more responsible, more accountable for their actions and for their responsibilities. Taking the LBMA now and having the BIS oversee it, it doesn't decentralize it, it centralizes it more. It rolls it up. And folks, that's the way it happens. When there's a problem, genetically, government, and I'm not happy about it, but this is how they think. Government thinks if there's a problem, then we need to get a better grip on it. And we get a better grip on it by centralizing it even more. So the solution that is implied is not a solution. It's another problem waiting to happen. It's a backstop, moving to another backstop, moving to another backstop. Anyway, absolute power corrupts absolutely. That's it. Related posts. We sent a lot of posts out yesterday, and there was a lot of news. BOA fund clients implied gold went from overvalued to underowned. It was a very crowded trade, according to Bank of America's clients. And 2 months later, they think it's becoming underowned now, which is ironic considering the market hasn't gone anywhere. But doesn't mean they're wrong. Founders, we just sent that out today. That's one of those stories, brokers versus traders. And then exclusive Besant announces, no one cares about that yet, but they will. And then Besant says Trump considered Yellen overpowered. Moving on. Coming soon, well, I wrote down 38 silver at least. I wanted to go to 42 yesterday, but we're below my level, so that's off. That's done, especially on a Friday. We can pray, but I'm not going to waste money praying. Data on deck, today's retail sales, very important. I think the market is going to probably put a lot of emphasis on retail sales. I could be wrong, but after, if you think about it, after the jobs number came out extremely low with the revisions lower, we've had inflationary data come out very high. PPI yesterday, for example, very high, right? Okay, and And so now people are going to see, well, at least we need the economy to be weak on the retail sales side to give us hope of a cut. I think that's the way the market is thinking right now. I don't think Powell should cut at all, but that's just me. Let's take a look at the charts. There's gold, nothing new, nothing to see there. Silver, all right, we're still on trend. We're above trend, right? So we could drop and be the impulsive behavior that I thought we would get, above 38.25 didn't happen. So I'm done. I'm wrong. Now you have to look at structures like this, right? And then you're governed by like a trend line coming in through here somewhere, or this moving average. That's the 50-day moving average if you want to look at it. But it looks good. I mean, it looks good. It's just not going to happen tomorrow on my schedule, unfortunately. I want to look at Bitcoin for a second. Yeah, so I'm not sure why this happened. I didn't pay attention to the news, but it probably was related to the White House saying that we're going to have a Bitcoin reserve, but we're not going to buy them. We're just going to take the Bitcoin that we confiscate from people and put it in there. So it's like an incentive to confiscate people's Bitcoin, and that's gold 2.0. Ethereum also took a whack, but probably not as bad, right? Yeah, not as bad. And that's because Ethereum's on a tear, and Ethereum is on a tear because remember, we need people to buy our treasuries. They're going to use that money and they're going to put it into stocks. And one of the ways they'll do that is stable coins. And one of the things that is important for stable coins is Ethereum. And Ethereum is now being added as a treasury security by companies. So Ethereum is undergoing a metamorphosis in perception. Uh, just as an aside, I'm not calling for a top at all in anything, but stocks are on all-time highs. Ethereum, Bitcoin near all-time highs. I mean, everyone's talking about this now. That's professional. So it's being watched. So it probably won't happen. But we are in a situation where in 99 and in 08, before those crashes, the rates started to climb and stocks ignored it. Rates are up. I don't care. Buy stocks. Rates are up. I don't care. Buy stocks. And it marched all the way up. And in 08, it was easier to remember. In 08, um, uh, oil was also rallying. So oil was going up, yields were going up, and stocks were going up. And it didn't make sense. Then the Fed cut in September 18th of that year, and they were dipping, and stocks went up for another month or two. I'm not sure. I think they may actually made a new all-time high, and then whoosh, the bottom fell out. And we are on that kind of a path right now. If you if you were to do an analogy, like do an analog of markets, we're actually, according to the analogy, the charting analogy, we're on that path. We're actually very early in it. So we could go a lot higher. It's crazy stuff. I would think Powell's going to not cut or Stacey's not going to cut. Remember, Jackson Hole's coming up. And then we'll see what happens from there. Anyway, I'm Vince. Check out the stories and have a great day.